Hello, welcome back. Microsoft is a company that I have long told you that I want to add to my portfolio. I haven't found the time to do so. And the problem with this company is the stock price. It has been growing tremendously in the past few years or so. You can see the price action from its max chart over here. For many years, this was steady, if actually not going down really. And many years, decades really, and all of a sudden it started growing tremendously and reached very high points. And right now it's down a little bit, but is it a good price to buy right now? Is the question that we need to answer if we want to add this to a portfolio. And it is very important to make sure that we are not overpaying. Imagine yourself buying the company here, in which case you may have actually overpaid and then having to wait for decades before you got your money back. This is actually like 20 years or so. And so if you bought at a high, basically at a peak, which was unreasonable back then, I don't know the exact financials, but I'm betting that this must have been unreasonable back then, you would have waited for many years to recoup your losses and basically make some money. And in the meantime, you may have sold as well, just aiming to get better opportunities back then. Now, if you take a look at the 6-month chart, you will see that the company has been going down. Same for the 1 year. It has increased a lot, and then it's going down a lot with the rest of the stock market. In the 5-year, you're looking at a different story. It's basically where its growth happened in the last 5 years. They have grown tremendously. Now, it's down 23% since its 1-year high. But many tech companies have fallen down much more than Microsoft. Does it make sense to buy right now based on this current financials that the company has and this current stock price? You would see that the P ratio is 28, which is something that wouldn't forbid us from buying the stock. But our price to free cash flow is a little bit more. It's 35.6 over here. The company has been buying back some shares, and their total liabilities compared to free cash flow is very low. We will examine that in more detail a little bit later. Revenue has been increasing, even though the company is a behemoth, of course, it's a super giant. They have been increasing their revenue at about 168 billion here from 90 over here. And this points to great revenue growth for a company of that size. Net income has also been growing tremendously, and free cash flow growth following, with the total equity growth following as well. Now, you will see here that the debt that the company has doesn't seem to be much at all, but they have tremendous returns and tremendous net income margin here. It's a software company. Software companies are notorious for that. And this is why it makes some sense to pay some premium. But you don't want to overpay. You don't want to be buying the stock at a very high price and actually have to incur losses in between your potential gains in the future, because it can go down if it's very overvalued. We will examine that in a little bit more detail, see whether it's actually overvalued or not. Now, the company is paying is 1% almost dividend yield right now, which is down, it looks like. But the free cash flow payout ratio is 30%. That's high for this kind of dividend yield. We want to examine our dividends tab here, in which you will see more details about the company. And you will kind of see here that the dividend that the company has been paying has been increasing over the years here. Now, even though the actual dividend per unit of stock has been increasing, the price of the stock has been increasing as well, effectively reducing the dividend yield as a percentage. But the 30% payout ratio for a 1% dividend yield may be slightly concerning. It's safe, but it may be not easy for the company to keep growing it at higher levels. 32% is not too little when we're talking about 1% in terms of a dividend yield. And remember, this has been going down for the most part because the stock price has been increasing tremendously. If you take a look at the 5-year chart again, you will see that it has been increasing a lot, and that really affects the dividend yield, as you can understand, because the higher the price, the less units of stock that you can actually buy. Okay, so if we take a look at what is going on with the company's financials, we can actually see the story behind Microsoft's operations. It has actually doubled their revenue. They have actually doubled their revenue here, and you will see that their net income has tripled, which is absolutely insane. So you're getting a company that is doing tremendously well in terms of financials. And over the past 5 years, they have been killing it. They have been slowly becoming a money printing machine, really. And if you take a look at the total equity, 72 to 142 billion in terms of total equity, doubling their equity pretty much. It's amazing, and you will see here that they have about 192 billion in terms of total liabilities. Yet if you take a look at the cash flow that they are generating, you will see that they made 56 billion last year. This is about 3 times their total liabilities, which they can pay back in about 3 years of free cash flow. And this is probably going to keep increasing. It's a story of increases here for Microsoft. You will see that their net income has been increasing every year. This is also increasing their operating cash flow, as you would expect. And yeah, they do have a lot of depreciation, amortization, a lot of stock-based compensation, but overall they have been increasing the top and bottom lines tremendously. And you will see here that they have been investing quite some as well. Look at these purchases of investments here. And in terms of financing activities, paying back a lot of debt and repurchasing common stock is what you basically love to see from your investments. About 16 billion in terms of the dividends that they are paying. That's substantial. And remember, this is about 1%, but it has a lot to do with the stock increase in terms of its price. This used to be about 3% in terms of the yield. It has gone down because of the insane stock increase. The free cash flow, again, 56 billion right now. But what we need to examine is whether it makes sense to buy right now, because we don't want to be overpaying, as I said in the beginning of the video. It's very, very important. It may be very, very attractive to see Microsoft doing that well, and you may be thinking, I need to get into this company right now, but you want to be making sure that you're not overpaying, because you're missing on some of the earlier gains from the dividend, which is now 1%. It's not nearly as good, and you may be paying a lot to buy the stock if you overdo it and if you pay a high price, a high premium. So this is what we're going to do here. We're going to examine the revenue growth of the company, and we're going to go lower. We're going to go, let's say, 6, 8, and 10 here for the next 5 years. We're going to go a little bit conservative. The net income margins, they are going to be high for a company of this sort. They are near 30%, and I think I'm going to stick to that. I'm going to go 30, 33, and 36 here. And the free cash flow margins are pretty similar every year, 90 to 100, 110. So I'm going to go 90, 100, and 110 here. Annual return of 13% is what I'm going to be aiming for. Let's hit calculate. And so as you will see, we are off. We want to be buying the stock at a much, much lower price. And even though I love Microsoft, I just can't see myself entering right now, especially as it keeps going higher. It's almost double as much as I would like to pay. Frankly, I would probably like to pay about 120 for this one. I don't know if that will ever happen. It will probably have to be a deep recession for this kind of thing to occur, or some sort of an event for Microsoft. But at $267, this is just not a buy that's worth it for me. It's expensive, so I would have to avoid it. If I bought back in 2017, it may have been a great opportunity, but right now it's just expected. People, traders, investors have caught up on it and actually have inflated the price quite significantly, and I just can't see myself entering. Let me know what you think about Microsoft. Please leave a comment below this video. I'd love to hear your opinion. And remember to leave a like and subscribe if you're not a subscriber already. You can always become a Patreon and get access to this tool by visiting the link in the description box below this video. It's myinvestorsheaven.com. And I'll see you soon in the next video. Bye-bye.